homeloansradio.com. We'll talk about it and see if there's a way we can make that work for you. Or if not, I'll tell you what you need to do to put yourself in a position in the next 3 months or 6 months.
So the forbearance guys checked back in. He said that he's talked in the past about whether 3 months of payments were needed on a new purchase in order to be considered current. They sold their house and closed on the 16th of September. They got out of the forbearance and paid August and September mortgages due on the 1st. And they just got a bill for October and paid it early this week. Would they now be considered current, even though they're actually closing in September?
Well, that sounds like a lot of moving parts. So they're under contract to buy a new house, but they were behind on their payments on the forbearance.
They sold their house and they closed on the 16th of September. They got out of forbearance and they paid August, September mortgages due on the 1st, and they just got a bill for October and paid it early. So they've paid 3 months on their house, which they're selling in September.
They're selling the house when?
In September.
What did it say?
The 16th. Mm-hmm.
Okay, so not yet. They're selling that this coming week. Mm-hmm. That's going to be a complex one.
Because they're paid October ahead of time.
Yeah, part of the rule is with the forbearance, if you're paying the 3 months, is you can't pay it ahead of time. But I mean, you and they're buying a house this month. It seems like you'd have to already have a pre-approval.
They're selling their house this month, is what I think. Right. Not buying a house.
A little too complicated for me to sort out right now. Basically, I need more info. Hit me up offline. We'll set up a time to have a phone call so I can make sure and give you accurate answers. But there's a possibility to make that work. You're listening to Home Loans Radio. We're going to take a quick break. We'll be right back.
Hey, it's Sabrina from the News Junkie. Do you have a question for that mortgage guy, Don? Text him at 77031. Now back to Home Loans Radio on Real Radio.
Hey. You are listening. Welcome back. You're listening to the Home Loans Radio Show, and welcome back to the show at the top of the hour. We're here doing what we do every single weekend morning. I'm here with my crew. Good morning, MJ.
Good morning.
Good morning, Fritz.
Guten Morgen.
Guten Morgen. We're here doing what we do. And if you're here by accident, congratulations. You have stumbled upon something amazing. We're here talking about mortgages and home loans and
gonna change your life.
Oh yeah,
absolutely. Of course, it's guaranteed. Not really, but you can text in your questions. It is a live show. We're here doing
some exclusions may apply.
Guarantee is not guaranteed.
Guarantee is not guaranteed.
Yeah,
may cause blindness.
Jeez. It may cause blindness and gas.
Yeah.
Guaranteed. Nope, not guaranteed.
Itchy eyes, diarrhea.
But
bleeding eyes.
Stop.
Might lose a toe.
Home Loans Radio, where we talk about mortgages in a serious and professional way.
Yes, we do.
Answering people's questions and text them in. We are a live show. It's second weekend today. The weekend of the September 11th, 20 years ago in New York. A lot of big memorial things happening today. So you're going to see a lot of that. It's
kind of crazy that everyone who's 20, they just grew up with that. They just had that history in their life always.
Right.
Because it's such a devastating thing for those of us who are, older than that.
Right.
Because it was just so unimaginable.
Yeah, that's
a whole bunch
sure.
of people. That's what they've always known.
Yeah, I was in 10th grade history class, and every TV in every classroom had it on, and during the class, I remember one student crying out, and we all looked up as the second tower was falling. We were like, what is going on here?
Yeah, it's one of those things. If you're around, everybody that was there, that was around that day, has kind of that exact locked in place memory of what they were doing. I've heard so many different stories of it. But anyway, our respects to those that earned them. And it is, but my point being that today is a live show. You can text into 77031, and we're talking about mortgages and home loans, and we can answer your questions. A lot of you have been texting them in. Record rates, we're still dealing with record rates. I'm not sure how much longer they're going to be around, though. I've been reporting on this article that I read recently from bankrate.com. They did a big survey, and they said that only 26% of homeowners that could save at least 1 point. So you can save 1 point up to 2 or 3 I did a loan list last week where we cut someone's rate by 4%. But people that can save at least 1% of the interest on their loan, only 26% of them have refinanced thus far, even though we had an entire year with record rates.
Wow. And
then in January, rates started going up again. Instead of being down in the 2.875 range where they are now, if you're well qualified, they crept up to like 3.25, 3.3. And all of us in the industry thought, that's it. It's going up to where it's supposed to be, because the rates have been artificially held down by the Federal Reserve, purchasing treasury bonds, purchasing mortgage-backed securities. And they've been saying that they're going to stop doing that. And when they call it tapering. When they start tapering, then the rates are expected to go back up. So we had February, March, April, May, June, July. They went up. They kept just kind of steadily creeping up. And then in August, we had an unexpected drop where they went back down. We're back down into that sub 3 range if you're qualified, and like low twos if you're well qualified for a 15-year loan. So I've been making sure to tell people, and I've had other people tell me, thank you so much for talking about this, for mentioning this. I thought I had missed it. Well, I'm telling you, you've got another window now, but it does seem to be like it's starting to creep up again. I've seen little signs these last couple of weeks, not big moves, but little, like there's 100 basis points in between each eighth of a point in mortgages. So we saw like a gain of 15 ticks. We call them ticks of that 100. So, and then the week before, another small increase. So we're starting to see it move up. If it's something that you think you've wanted to find out about, get yourself over to homeloansradio.com, go to the apply now section. We'll get you a quote. You can get those numbers locked in. And if you have a rate above 3.875, you can probably lower your rate at least, close to a point. In other words, if you're above 4.5, I don't know what you're waiting for. You must just love giving your bank extra money.
So you're saying that they have another opportunity.
You got another opportunity.
They got another chance.
You got another kick at the cat.
There it is.
You got another try for the gold ring. You got another, what else? Give me another one, Fritz. You got another shot?
I don't know.
Yeah.
A shout? Yeah.
Here we go. Got another shot?
Oh, yeah.
Anyway, now's the time. I think, and then it's not to, be a huckster or anything. I'm telling you, I think now's the time. I think if you want to get in on this window where we're still at record low rates, the next few weeks are going to be kind of key, where we're going to see if they start for real trending up, or if what I've seen in the last couple of weeks is just kind of an outlier, or if it's the canary in the coal mine. So
we may have gotten a little, how it works is that the economy is growing and getting better,
right?
But then those numbers came in lower, which may give the mortgage opportunity another little longer life in this low rates, because when the economy comes back enough, they're going to quit buying those bonds.
Well, my thought would still be, well, what are you waiting for? Because they're not going to get any lower than where they are right now,
right?
Because they're near the record lows. They were close to all of last year. We lost it for a few months. Now we're still there. We're still we're hanging on. So if it's something you want to find out about, it's not, I don't make it hard. That's the number one reason people say that they haven't refinanced. Well, the number one is that 50% of people don't know what their interest rate is.
Right.
But the number two reason that people don't, according to this survey, is that it's too much hassle.
Well, they think it is.
Yeah. I try and make it, I've worked really hard to make it hassle free, where you can do it online. You don't have to make an appointment. We do everything virtually. When it comes time for your closing, I send a notary to your house or to your office. I mean, we try and make it really, really simple. Everything is done digitally. You can go to homeloansradio.com, hit the apply now button. We send you a quote. And then if you like it, great. If you got another quote and you want to get a second quote, which I recommend you do, great. Same thing. But today, text in your questions to 77031. Got a couple segments left here. Let's get some folks some answers.
Okay, let's do that. I purchased in January for $130,000. My property is worth $168 now. Is it worth refinancing? My current rate is 3.375. Conventional. My mortgage lending credit is 685.
I would say so. When did they say they bought it?
January.
Yeah, I think you're probably in a pretty good position where you are now, with your credit being in the 685. A rate just a little bit over 3 is good. Even if you had a 740, 750 credit score right now, you'd be able to get it down maybe a half a point or so. And on that size of a loan, it's not going to make sense for you to refinance. Now, if you have PMI and we can get rid of the PMI, or if you're planning to shorten your term, dramatically down to a 15-year or something like that, we might have something to talk about. But if you're thinking about another 30-year loan, I would say no, it's not going to be worth it. It would take you too long to recoup the closing costs. And that's really what we look at, is how long that would take. And if it saves you enough money that it makes sense over the long term. But I would say you're probably good where you are right now.
I know you've explained this before, but briefly tell me, why is it better to make extra payments on a mortgage at the beginning of the loan, and how the interest actually works, and how is it different from a credit card?
Well, so mortgage interest, the way that it's amortized is when you do a 30-year mortgage, the interest portion of it is front loaded. So like payment number one, you're probably paying of that. Let's say you send in $1,000 payment, probably $900 roughly of that is going towards your interest, and only a small portion towards principal. And every month as you go forward, that amount shifts. If you go back to your closing package from when you bought your loan, you can see an amortization chart. And it'll show you each month how much is going towards principal. So in the beginning, almost everything's going towards interest on a 30-year loan. When you get around 20 years, then it's kind of 50-50, where you're paying half principal and half interest each month. And then as you get past the middle of the loan, when you get down to like 2 years left, you're paying 90% principal every month and only a small portion towards interest. So mortgages are front loaded on the interest. The banks collect a lot more interest in the beginning than they do on the back.
So they were asking, is it better to make extra payments on a mortgage at the beginning of the loan?
It doesn't matter when, but so if you're making an extra payment, let's say, same example, your mortgage is $1,000, right? And you just got your mortgage this year. So you're paying $900 of that $1,000 towards interest and only $100 towards principal. So it would take you 10 months to pay roughly $1,000 towards your principal of your loan. So you'll see when you get those statements, it doesn't look like it's going down very fast in the beginning. But if you, at the end of that year or anytime during that year, take a lump sum of $1,000 and send it in addition to your principal, in addition to your normal payment, you send it to the bank and you say, I want to put this $1,000 towards my principal, then you've doubled the amount that you've lowered your principal. So you pay those 10 payments, you just send in an extra $1,000, that all goes towards principal. So you've doubled the amount that you've lowered your loan.
And it's tricky because you have to really specify that you want it for most of the time on the website. It'll tell you if you want to make an interest only payment, and they'll tell you how they want you to do that, or they'll have a place where you can click that in, because otherwise it's really easy for it to just get lumped in as an extra payment.
And if you pay an extra payment like that, just say annually, once a year, you pay an extra $1,000 on your principal only, you can lower your payoff down to around, it depends on the loan size. So I'm just kind of generalizing, but let's say on a $200,000 loan, it would be approximately 7 years off of the loan if you did that extra payment once a year. A lot of people do it when they get their tax return back. They'll take like half of whatever the refund they get and put it towards their principal. And you can lower your loan. Instead of a 30-year loan, you could lower it down to 20, 22, 23 years just by doing that.
Are there limits of how much you could do that with? Like, if you got a windfall of $20,000, could you make that interest only? Principal only?
There are limits, but not every servicer has them. So different banks can make different rules on how fast you can pay down the principal. But if you get a really big chunk, you may want to talk to them about doing something called a recast. Most servicers will let you do a recast one time. So let's say you do a scratch off and you win $80,000, and you're like, I want to pay this mortgage off faster. I want to put in $80,000. Then you can call them and talk to them and say, hey, if I put this $80,000, can you maybe you want lower payments? You can spread that mortgage out again, or you can shorten it down to a 10-year. You may be able to do that without refinancing. If your rate is high, like in the 4s and 5s and 6s, well, then you can do the same thing by refinancing. But if you've got a good rate, you want to talk about recasting the loan.
Here's someone's asking a couple more on the subject. Does it make any difference if you make an extra payment towards your interest?
No, you wouldn't want to do that. That would be defeating the purpose. Yeah, the goal, as soon as you get the principal paid off, you don't pay any more interest. You're done. So the interest
is calculated on the balance.
Well, the interest is calculated at the very beginning. Stays the same. But if you're paying your principal off faster, let's say you pay it off in 20 years instead of 30 years, that's that many years that you're not paying that interest because the principal's paid off.
And someone's asking, how is it legal that they front load the loan like that?
Oh, good question.
I can't.
That's just how mortgages are.
Yeah, I wouldn't say legal. I don't want to put the word legal in there because it's the way that they're done. It's like, let's say if you own the cheese, you get to decide how the cheese is given out. Is the more I would say it. You're the bank. You can say I'll loan money this way, and people take it or leave it. That's just kind of how it's done. It's been done that way for a long time. I couldn't even tell you how it originated, but the bottom line for the bank is that most people only keep their house, their mortgage 5 years, 7 years before they, either refinance or sell or move up or something like that. And I guess it's a way for banks to make their money up front. But they're the banks. They're giving you $250,000 or $500,000,
Right.